Well, at the moment, things are looking certainly much better. Given the fact that Nifty yesterday once again closed at a new life high, of course, on a closing basis. And with that, we've seen more addition in open interest as well towards what looks like long. So an advance for about 0.5% for the underlying, about 3% added in open interest. The Bank Nifty as well continued to move upwards, holding on above the mark of 52,500. And of course, another 2.5% added in open interest there as well. Now, as far as the option market is concerned, we've seen a lot of traction in puts and more traction in puts as compared to calls yesterday, perhaps also on expected lines given the fact that the Nifty moved higher. And based on that, we are looking at more and more writing around the 24,000 put. This also means that perhaps, at least in the near term, traders are betting against the Nifty closing below that mark, at least as far as this week is concerned. And of course, on the higher end, we're now seeing a little bit more traction around 24,500. It's a roughly 500-point range that we're potentially expecting the Nifty to move within through the course of the next few days. But you never know how things can, in fact, change. Well, we move on and talk about the Fin Nifty as well, because that's where we have the weekly option expiry. Just take a look at where we have seen a little bit more put open interest, and that's around strikes of 23,500 and 23,600, and on the higher end 23,800 and thereabouts are a little more active. So that's a rough range that you can work with. But remember, the Fin Nifty option premiums are usually very contracted, and hence selling becomes extremely challenging under those circumstances. That said, we're going to also keep an eye on a whole bunch of stocks. So we have longs in MGL, Oracle Financial Services, Deepak Nitrite. All of them have moved sharply. Of course, Hero MotoCorp will also react to its June volumes, which came after market hours. And among other stocks which saw unwinding, about a short covering for Indus Tower, PVR, Inox, Coforge, along with UBL. So a lot of stocks out there to keep an eye on. But, with all the data that we have, the question really is, what do you do and how do you perhaps use options in such markets? Well, we have Amit Goel of Amit Ventures who's joining us on the show this morning. Amit, good morning. Thanks so much for joining in. Let's start off with your view on the benchmarks. I believe you also specifically have an option structure for the Bank Nifty. Can you take us through this?
Yeah. Good morning, Agam, and thank you for having me on your show. And very good morning to all your viewers. Talking about the benchmarks, we have been in a tearaway bull run now from the lows of what we had punched on the election day results. We have, in fact, broken out of a channel in which the Nifty and the Bank Nifty have been trading for a fair bit of time, for the last 6 months, in fact. And now we are trying to build a new trajectory. So given this backdrop and the positive news flows on all accounts, including the GST collections, and the PMI data and everything, I would suspect that I don't see any sharp correction in the near term. Along with the options data, as you have rightly mentioned, that 24,000 happens to be a very strong support. I would rather look at buying on dips, and if Nifty does correct, and some of the early entrants take a little bit of profit booking, and Nifty corrects at around 23,900 or 24,000, we could look at building fresh longs for the next week. Having said that, I do have a specific structure for Bank Nifty. If you tell me, I can take you through that.
Please go on, Amit. Tell us about what you are doing with the Bank Nifty at the moment.
Yeah. So the view remains the same as with Nifty. I'm still bullish on Bank Nifty as well, though the structure in Bank Nifty is not all that strong as Nifty is, because Bank Nifty punched its all-time high 3 sessions back, whereas Nifty did that yesterday. Having said that, the overall bias still remains on the upside, and the structure that I want to suggest our traders, short-term traders, is this. We look at constructing a Bank Nifty bull collar ladder, which essentially entails a 3-leg strategy. The entry range and time for entering this trade would be post 9:30, so that we allow the markets to settle down a bit. And when the spot is within 52,450 to 52,650, if the spot ranges between these two numbers after 9:30 a.m. Today, we could look at entering a bull call ladder for tomorrow's expiry, wherein we buy the 52,500 call one lot, we sell the 53,000 call one lot, and we sell the 53,500 call one lot again. What this does is this minimizes the risk on the downside. So if there is any sharp profit booking between today and tomorrow, we limit our risk to about 2,000 rupees on this trade. Though this trade also exposes us to unlimited risk on the upside beyond 53,800, sorry. So what we could look to do is we could have a rupee stop loss and a rupee target, wherein if we anytime during the day or today or tomorrow, we end up making a 2,000 rupee profit, we could exit the trade. And on a lakh rupee margin, this gives us a cool 2% yield in 2 days time with about, we'll keep our stop loss also at about 2,000 rupees on the downside.
Right. Okay. So just want to revise the conditions under which you actually enter this trade. Firstly, well, as Amit has mentioned, you're looking at a spot price of anywhere between 52,450 to 52,650. And under those circumstances, what you are actually looking to do, and remember, this is for tomorrow's, well, weekly options expiry. What you're looking to do is you are buying the 52,500 call, and against that, you're also selling the 53,000 call, along with that, the 53,500 call as well. And as, pardon me, Amit has put it, you're looking at a target of around 2,000, pardon me, and your rupee stop loss in this case is also 2,000, and your risk to reward, naturally, that this means that it's 1:1. However, if you do stand to make 2,000 at this point in time, considering a margin of around 1 lakh rupees, you're making about 2% over the course of today and tomorrow. Amit, is there anything additional that you may like to add, or is this largely covers it up?
This largely covers it up, Gam, you've rightly said.
Okay, Amit, so let's move on and talk about L&T. I believe that one is also on your radar this morning.
Yeah, the structure in L&T happens to be that of non-directional. It's trading in a broad range, barring the the extreme movements during the election results and the exit poll days. We've seen L&T move in a very broad range of about 3,400 and 3,700 levels, and it is currently at around the 3,500, 550 levels. It seems to be in the middle of that range. If you look at the other technical factors like ADX, like RSI, on a higher time frame basis, most of them are fairly neutral. Given the neutral stance on L&T and not much of news flow, barring that order announcement yesterday, there is not much action happening. And if you also notice that the result for L&T is around 23rd of July. So I don't see a lot of action happening in this counter during the next couple of weeks. So in order to take advantage of this, what we could do is we could set up a slightly aggressive short strangle in this counter, wherein we look to sell the 3,700 call. Along with that, we also sell the 3,400 put, one lot each of the monthly July monthly expiry. The rupee stop loss here we will maintain at 3,000 rupees, and we will also target about 3,000 rupees on this trade. Considering that this is a non-directional and an unlimited risk, any beginner traders who are not well versed with this kind of trades can stay away from it, and anybody who is well versed with it could look at entering this. There are some entry range and timings. I will obviously suggest to enter post 9:30, allowing the overall markets to settle down a bit from the opening levels. And if the spot ranges between 3,500 and 3,550, which is the midpoint of this range, we could look at entering this trade.
Okay, so well, a straightforward short strangle as far as L&T is concerned, and the strikes that which Amit has also mentioned at the moment, a little bit more aggressive. That's because well, the strikes are a tad bit closer to the spot. But Amit, I do have a follow-up question, and I want to revisit the Bank Nifty strategy that you've taken us through. When it comes to your sell legs, both of them are at different strikes. That is the 53,000 call and the 53,500 call. One may perhaps question, why is it that you are not going ahead and selling the same strikes? Why is it that you're not selling two lots of the 53,000 call, or for that matter, two lots of the 53,500 call? And why are you actually distributing it across two strikes?
So since we know that Bank Nifty is slightly a little more aggressive counter and it can move sharply, especially on expiry days, I want to be a little more comfortable with the range of the trade in which I am profitable. So instead of selling it with 2:1 kind of a trade, wherein we buy the 52,500 and sell two lots of 53 or 53,500, which basically is a ratio spread, I am looking at spreading out the range in which we are likely to collect some profits. That's one of the main reasons why I wanted to spread out the range in which I'm profitable and keep a little more buffer on the upside.
That's the reason why, of course, you actually are spreading it across two strikes and not necessarily keeping at one strike. Amit, on that note, taking a moment to thank you for joining us and taking us through these relatively complex and sophisticated structures, also simplifying them for our viewers, and of course, helping us with that strategy on L&T as well. Well, with that, it's over to you, Neeraj.